Listen, we need to have a serious talk about your wallet and your future, especially if you are standing on the doorstep of retirement or if you've already walked through that door. You've worked hard, you've saved, and now you're looking at these new-age digital banks, these neobanks like Monese, and you're asking yourself a very specific question: can I borrow money from them? I understand why you're asking. Maybe the car needs a repair, maybe there's a family emergency, or maybe the cost of living is just squeezing you a little tighter than it used to. You see an app on your phone and it looks easy, it looks modern, and it looks like a quick fix. But before you touch that app, I want you to stand up straight and listen to me, because your financial security in retirement is non-negotiable. The short, direct answer when it comes to Monese is this: Monese is primarily a mobile app for current accounts and money transfers. For a long time, they did not offer traditional credit products like personal loans or overdrafts in the way your big high street banks do. However, they have introduced features like Monese Boost and partnerships that allow for credit building and small-scale borrowing in certain regions, specifically the UK. But here is where the fear comes in, and where you have to be so careful. When you are retired, your income is often fixed. You don't have the luxury of working more hours to pay off a debt that goes south. Borrowing money through a digital app can feel like play money because you're just tapping a screen. It doesn't feel like sitting across from a loan officer who is looking at your collateral. That ease of use is a trap if you aren't disciplined. If you are looking to Monese because you've been turned down elsewhere, that is a massive red flag. Are you asking to borrow money because you are living beyond your means? If you are about to retire and you are looking for a loan to cover daily expenses, you are heading for a crisis. Debt is a bondservant to the lender. In retirement, you should be the master of your money, not a servant to an interest rate. Now, let's look at the mechanics. If you use a feature like Boost, you are essentially looking at a small sum credit line. For a retiree, the question isn't just can I, it's should I? If you use these tools to build credit, I have to ask you, why do you need a higher credit score right now? If you own your home and your car, and you're living on your pension, chasing a credit score by paying interest to a digital bank is a waste of your precious resources. You are giving away your money to prove to a computer that you can handle money. You should already know you can handle money. The problem many of you face is the convenience of these apps. They make it so easy to move money around that you forget that every pound or euro you borrow has a cost. And for those of you who are frequent travelers, which I know many retirees are, you might love Monese for the low-fee currency exchange. That's great. Use it for that. But do not confuse a great travel tool with a lending institution that has your best interests at heart during your golden years. If you are in a position where you truly need a loan, I want you to stop and look at your must-have expenses versus your want-to-have expenses. If the money from Monese is for a want, the answer is a hard no. You wait. You save. You do without. If it is for a must, like a medical bill or a roof leak, you must compare the interest rate Monese or their partners offer against a traditional credit union or your established bank. Here is your actionable takeaway, and I want you to write this down. Before you borrow a single cent from a digital platform, you must have an airtight repayment plan that does not touch your emergency fund. If you don't have 8 months of living expenses saved in a high-interest savings account, you have no business borrowing money from an app. You need to check the specific terms in your app today, because these digital companies change their rules faster than the weather changes. If Monese Boost is available to you, look at the APR, don't look at the monthly fee, look at the annual percentage rate. It will shock you. It is often much higher than traditional lending because they are taking a risk on quick, unsecured credit. Retirement is about peace of mind. You cannot have peace of mind when you have a digital debt hanging over your head. If you need money, look at your assets first. Can you downsize? Can you cut the cable bill? Can you sell something? Borrowing should be your absolute last resort, not a convenience because an app made it look easy. I want you to be powerful with your money. I want you to be in control. Using a digital bank for its intended purpose, clean, easy spending and transfers, is smart. Using it as a crutch because you haven't balanced your retirement budget is a mistake that will cost you your security. Keep your money where you can see it, keep your debt at zero, and stay safe.